Hey, what is happening, Bulls and Bears? BX4 News back in the building, back with another dose. A lot of economic, financial news, and more to get caught up on. We've got baby boomers are getting pummeled because of the stock market downturn. A lot of these baby boomers were not either aware or cautious enough in their investing, and they're all in the stock market. A lot of them weren't balanced here. We're going to talk about that here in this report. More inflation numbers are out. Americans are hitting the wall financially, and they're getting tired of paying tips. We're seeing people saying that they're tired of having to pay such big tips on eating out, dining out, and they're starting to question the whole tipping culture. And we got a lot of other stuff to get into. Let's go ahead and get started right here. We have Nike out there warning that shares are plummeting and that sales are also going to plummet because of the tariffs. And they're talking about double digits, folks, because of these tariffs. And they already reported a 9% sales decline in the holiday season there, fourth quarter 2024. And the forecasting now a steeper than expected drop in fourth quarter revenue. Nike said sales will be down mid-teens range for the quarter that ends in May. In an earnings call, Wall Street had expected sales to be down by a little more than 11%, folks. So we've got companies out there saying that these tariffs are going to be damaging. But yet it's still kind of mixed amongst, I think, even readers on this channel, viewers of this channel rather, what kind of effect these tariffs are going to have. Some people are very optimistic, saying it's going to bring jobs back, so it's going to be an end win. Some people say it's going to be a lose-lose because prices are going to go up and jobs are not going to come back to the U.S. because it's too expensive to manufacture stuff here, because the cost of living is so high here, these companies don't want to pay these wages, right? So unless they, talking about the current administration, unless they come up with a way to lower the cost of living, we're talking about deflation, lower price levels, not slowing inflation, right? Inflation going up slower just makes things more expensive, just at a slower pace. We need deflation, folks. Until that happens, I don't think you're going to see many jobs coming back to the U.S., and I think the current administration is making a big, big mistake. And there's a lot of other things happening right now that are making people very angry. You can see the anger across the country, a lot of different things happening, crazy things happening. But I told you it was going to get crazy and chaotic and wild. The writing's been on the wall for a while, and things are being drastically cut and slashed and abolished, basically. They're cutting out entire agencies, departments, and you're going to see spending drop off of a cliff because of all the people that are losing their jobs and all these programs that are going to be losing funding. So it's going to be probably the wildest year we've seen maybe since 2008 financial crisis. The question continues to be, will they continue to inflate, or will we finally see some sort of correction where price levels come down, the cost of living comes down, housing, rents, cars, everything comes down. You're going to have to see a change in banking for that to happen for the most part. Look what's happening with banks now. They actually just loosened their lending. And we have this report just out here in the past couple months. This is the first quarter of this year, even though the first quarter is not done yet. This is the number of banks tightening. We saw in 2020, banks initially were very concerned with the health crisis breaking out. So, of course, banks tightened then. Up to about 70% of banks were tightening at the very beginning. Didn't last long, folks. Then banks loosened, and the loosening of the lending was actually so inflationary. We saw what happened with prices, right? The helicopter money, the stimulus checks on top of that. People didn't have to pay their bill, so then people went out and spent more money because they didn't have to pay their mortgages and rents in many cases. And all the flood of money into the economy made prices go up, but also banks made it much easier to borrow money. Look at this. The number of banks tightening went down to negative 40%. So 40% of banks were cutting their lending standards, making it easier to loan out money. That's another thing that added fuel to the fire that caused all this inflation. So then banks started tightening up over the past few years. We got up there in 2023, third quarter. But ever since then, look, it's been more loosening of the lending and less banks tightening. And this chart is the net percentage of domestic banks tightening standards for credit cards, right? And that's the key driver of the economy, folks. Most of this is driven on credit card spending, most of this economic activity, basically. And speaking of people maxed out on their credit cards or just in a lot of trouble with their finances, people are starting to push back against tipping. This is the tipping culture. And there's a whole story out here about how people are just tired of tipping. You see these tipping screens come up. You could buy something for $3 and they're going to want a tip of $1. Like that's a 33% tip if you just buy $3 worth of goods. And there's no shame in their game. I mean, these people that are serving, I mean, I can't blame them because they don't get paid enough to really make it just on their hourly wages. So they're forced to ask for tips. And then people get tired of paying so many tips that it causes tension between the servers and the customers. And I think the whole thing is just kind of a weird energy in a restaurant. Then you got to give a certain tip, otherwise the server's going to be mad or might be hurt. Whole thing's just weird energy. So I avoid eating out, not just because of that, because of the prices, and I question the health of the food at a lot of these places. So I don't dine out very much for a lot of reasons. But the whole tipping thing, that's just another thing to add to the list of reasons why I'd rather be in a low stress environment, cheaper environment, not have to pay a tip, make food at home, eat at home. And this was a report. You can see it right here on YouTube. It just came out recently. And tipping fatigue at all-time high. Americans push back against tipping culture. Well, all they have to do is don't go out to eat so much. Just eat at home more. Make your own food. But a lot of Americans are just lazy. They're willing to pay the higher price just for the ease and comfort of just sitting down and eating their food. Even though they're loaded up on debt, all-time consumer levels of debt right now, people are still wanting to eat out. Well, is this a turning point? With this article, this report says tipping fatigue at all-time high. Are people finally saying enough is enough with all these credit limits getting closer and closer to being maxed out? But remember, banks are loosening for the most part, so or a lower number of banks are tightening, so you could say they're loosening. So people are still able to do this if the banks keep doing this, but will people finally say enough is enough, even if they have the credit and the limits available on their credit card, the little plastic magic machine there? Will they pull back on dining out? Please let me know down in comments. Are you pulling back on dining out like I have? Over the past few years, I drastically pulled back on dining out. I think maybe 10, 12 years ago, we used to pretty much go out every Sunday out to get breakfast, usually IHOP or one of those breakfast places, sometimes Denny's. Sometimes it'd be like a local independent place. And it's fun. Get to talk to people, meet people. Nothing wrong with that. But enough is enough at some point. You've got to say no at some point. Otherwise, they're just going to ask for more and more and more. And that's why we see out of control prices. Well, it's one of the reasons. There's a lot of reasons. One of the many reasons why prices are so out of control is because people don't have any caution in their spending, right? People are just convinced there's always going to be a paycheck. They're never going to lose their job. If they do lose their job, they've got other, maybe unemployment or another job they can go to. People aren't concerned about not having a way to pay their bills, but we're seeing more and more people are starting to get cautious though. All right, folks, more agencies being slashed. The Small Business Administration plans to slash staff by over 40% amid an agency-wide reorganization. So this is going to be where all these people are going to work. That's a lot of people. Are they going to be servers, and are they going to be asking for high tips at their new job to make up for the lower wages? And that's going to be, according to Politico, that's going to be about 2,700 jobs. And that's just one of many, many agencies that are being heavily, heavily slashed. Moving on here, folks. FedEx is out there now warning that their full year forecast is in uncertainty because of the economy and also bad weather. FedEx cuts its full year forecast because of all the uncertainty right now. But bad weather, that's an interesting one. I would think that if the weather was bad, more people would order stuff and you'd have tons more packages because people don't want to go drive in the bad weather. Am I wrong on that? FedEx cut their forecast, though. And what are they saying here? This is out of Reuters. And we don't get to read it. They want us to subscribe. Anyway, that's all you need to know. They're cutting their forecast because of the uncertainty in the economy. All right, people, let's talk about what's happening with the baby boomers. A lot of them got rocked and rolled. Maybe not rolled, but at least rocked with the recent stock market downturn. Will markets recover? Will these people get their retirement funds back? Boomers are in big trouble if the stock market keeps sliding. Many of them were not positioned. They didn't hedge against a possible downturn. For so many years, it was just up and up and up. You'd see minor corrections, minor pullbacks, but then it would be new all-time highs just weeks or months later. Could it happen this time too? At some point, folks, people, if you look at history, there's always a breaking point. What goes up must come down. That's a saying, right? But things have been going up for so long now, people think that this is the new normal, that there's never going to be any sort of correction or any sort of prolonged downturn. We've seen corrections every month, right? Drops that last a few days to a few weeks, but it always goes on the new time high to all-time highs. Even if you look at the biggest corrections, like the financial crisis, eventually things recovered. But if you didn't position yourself, sometimes it took you a few years to get back. And if you're in a position where you have to retire while the market's down and you need that money, then that could be the biggest trouble. And that's why they're talking about the boomers here. And Market Watch put it like this here with an example. Somebody 63 years old, planning to retire, and she watched in horror as markets tanked. Will she have enough savings to get into her 90s? Well, she could still keep the money invested and hope for a recovery. What a lot of people do, though, when they see the markets tank, is they panic, and then they sell because they're afraid the markets won't recover. And then they end up selling low, and then the markets do recover. Then they missed out on the recovery. So it's a big psychological thing with people that lose their money. They typically buy low, or they typically buy high and sell low. Now, unless you're holding long term, because again, over time, you're always going to see it recover if you just wait. It is this time different. People think that this everything bubble is the last straw, the straw that broke the camel's back. And they think that this could finally be the end of this financial system. I mean, what do you think about that? I mean, if banks just come in and loan out more money after this correction, if there is a correction, then it's just going to be more inflation and back to new all-time highs in the markets, right? And why do I say that? Because pretty much all the activity, most of the economic activity that we've seen has been debt-based spending. And we found out just a few weeks ago that federal jobs accounted for nearly half of the GDP because of the spending from those jobs and government spending combined. And then you had other stats saying it was close to 70% of activity, of economic activity, gross domestic product, was consumer spending. Then you looked at consumer spending, and most of it wasn't saved money that people had put away. It was mostly borrowed money, loans, running up credit cards. And if you look at the picture of a debt, if you look at a chart, the debt just keeps climbing. And until that changes, you're likely not going to see any sort of correction or downturn like so many people were hoping for. And that's why we're always keeping a very close eye on what's happening with the banks, because that's the driver of it all, right? When most of the economic activity is driven on borrowed money, the banks are the backbone of it all. So we look at, are the banks tightening? Are they loosening? Well, they're not tightening now. We just showed you that chart at the beginning. So that tells you expect more inflation on top of the tariffs and everything else that could be inflationary. And look at this, folks. We've got these types of warnings. We're seeing these come out several times a week now of just major impacts of the economy with everything happening right now. Australia Treasurer warns seismic U.S. global shock. He's warned, that's Jim Chalmers, warned the impact of the new administration's policies. So there you go. Another warning, folks. Is he right? Is he wrong? Are you okay? Are you grabbing your popcorn? Are you ready for the show? Or are you concerned? Are you frightened? I think a lot of us here, probably most people on this channel, are probably positioned for this because we've been talking about this uncertainty for a long time. The question is, how will the banks react? And what will happen with the cost of living, which is driven, again, by the banks. Right, but the bottom line is, folks, if you know what's going on, you can make money off of it. So invest in things that are going to go up. People that invested in gold and silver, doing very well. People invested in even digital assets really well. I mean, last year I had to file my taxes this year on my profits last year, and it was a very good year. And a lot of the money that you gave me with super chats and stuff like that, I don't ask for tips. The whole tip culture, people are tired of that. But the money that you did give me through super thanks and stuff like that, that helped me invest more, and I turned it even more money. So thank you very much to everybody that helps this channel, and it really helps. I might not have invested very much if it weren't for this channel, and therefore would not have had a very good year investing last year. So thanks for that, everybody. What else here? We've got other news to get into. Credit card swipe fees. Swiping too much for small businesses and consumers, folks. And with people being so reliant, oh, sorry, I blocked the article. People being so reliant and dependent on credit cards, of course they're going to raise their fees, right? When people don't have any discretion in their spending and they just swipe, 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 they're going to raise their fees. That's just what it is, right? So you've got to have some, what's the word I'm looking for here? You got to have some discipline in your spending. If people don't, fees are just going to go up, folks, and they're making records amounts of profits now with these swipe fees. Small businesses have to pay that. And we talked about a few days ago about how a lot of small businesses now are asking for cash because these swipe fees are so outrageous. And these swipe fees typically 2 to 4% of the purchase amount. So think about that. So a lot of people put their money in savings, hopefully to get a 4, maybe a 5% APR or annual percentage yield on their savings. But these credit card companies are getting that with every swipe between 2 and 4%. And swipe fees were first introduced to offset the cost of making a transaction with a credit card. But over time, the credit card companies and banks have learned how to game the system, and swipe fees have gone off the rails, while the cost of processing a transaction has actually declined. So the cost of actually running the transaction, the fees, or the equipment rather, the transaction mechanism, the people behind it, the workers behind it, they have to monitor everything. Those costs have come down because of technology, but the fees are going up. I mean, of course. I mean, what do you expect from the banks and the credit card company? All right, folks, moving on here. Warnings out of the housing market from a CEO of a home building empire. Weaker for longer housing market as consumer confidence plunges. That's how Fortune put it. But the question is, why is consumer confidence plunging? Is it because of the actions of the current administration? Or is it because the debt has become so high that people aren't able to spend like they used to? And that's why we started seeing last summer, we started seeing signs of people pulling back on certain types of spending, less people buying food and snacks at gas stations because people are just getting gas. Price of gas comes down, people are going to start probably going back to the snacks and all the junk food that they used to get at the gas stations. And on that topic, speaking of gas stations, Walmart's following Costco's lead on gas stations. So they're going to open up a bunch of gas stations with their near their stores or on their store's property and offer cheaper gas. Like Costco's gas is pretty good price. So it looks like Walmart's trying to follow their footsteps. And we already see how Sam's Club kind of resembles Costco, right? With the wholesale type of large packaging and stuff like that. Big box retailer. What it means for Amazon. Walmart rolls forward with brokerage. Okay, that's a different article. Is Taylor Swift Lover House block set from Walmart worth $90? Wow, whoa. I didn't even mean to talk about this. They're selling a $90 block set because it's a Taylor Swift block set. Oh my gosh. $90. I'm betting probably some dumb people are out there buying it. Here it is, folks. Look at that. Very realistic looking. Could have a Taylor Swift block set. Okay, the one on the left, that's got to be a real picture here. The one on the right, that's the actual block set. There you go. $90, folks. What are these people thinking that are buying this? And maybe it'll be a flop. Maybe nobody will buy it. But fans of these pop artists are crazy. We see some of these, not just pop artists, even some of these rock artists charging $100, $200, $300 for their concert tickets. And people buy memorabilia and the shirts. Sometimes they sell shirts for $20, $25 at a concert. It's crazy, folks. When people get caught up in the entertainment type of thing, the fandom, people just spend a lot of money. And mostly from where? Well, you guessed it, mostly swiped on that plastic, folks. What do you think about all this? What do you think about what we talked about at the very beginning with the baby boomers in big trouble? Most of them did not brace for the stock market downturn. They were just kind of passive in their investing. FedEx cutting their forecast. What else did we talk about today? Of course, the Taylor Swift toy set. Nike talking about their lower forecast as well. We also have wine country here in California bracing for tariffs too, so that's going to be another thing. All right, we're going to get out of here, folks. Thanks everybody for watching. As always, keep stacking. We'll talk to you very soon. Bye for now.